Okay, let's talk about something that drives a lot of people crazy, the mystery of the incredible shrinking bonus.
You know the feeling, right? You get that email, you see that big, exciting number, and you start making plans. But then the actual take-home pay hits your bank account, and it's a bit of a letdown.
So let's just imagine you've been awarded a fantastic $5,000 bonus for all your hard work. Awesome. But when you actually look at your pay stub, the number staring back at you looks a lot more like this. And that's when you ask yourself the big question. Why are my bonuses taxed so much? Well, here's the good news, and it's actually pretty surprising. The short answer is, they aren't. Your bonus isn't actually taxed at some special higher rate than your regular salary. It all comes down to how the money is withheld. And this is where it all starts. It's because of a key term from the IRS called supplemental wages. This is the special bucket the IRS puts your bonus into, and it's pretty much the root of all this confusion. And you can see this category is for a lot more than just your annual bonus. We're talking commissions, overtime pay, special awards, even severance pay. Basically, it's any chunk of money you get that isn't part of your normal, predictable paycheck. Okay, so what's the big deal with this classification? Well, it's absolutely crucial because it means your employer has a couple of different ways they're allowed to calculate the tax withholding for these payments. And those two ways are right here. First, you've got the aggregate method. That's where they lump your bonus and your paycheck together and do a bunch of math. It's more accurate, but it's also more work. That's why most employers go with option 2, the much simpler flat rate method. They just withhold a single flat percentage. And what is that magic number? It's 22%. For any of this extra or supplemental income under $1 million a year, the IRS says your employer can just withhold a flat 22%. Now here's the catch. That 22% is a blunt instrument. It doesn't know about your deductions or your tax credits or anything specific to your situation. It's just a simple, safe number for your employer to use. And for a lot of people, that 22% is way higher than the rate that gets withheld from their regular paychecks. And this really gets to the core of how the U.S. tax system works. It's a pay-as-you-go system. Think about it. Withholding isn't the actual tax. It's just your employer's best guess to prepay your taxes during the year so you don't get stuck with a massive bill later on. Which brings us right to the biggest myth we need to bust today. The whole idea that your bonus money is somehow different and that the government taxes it more heavily. It's just not true. Here's the fact. The bonus is just withheld at a different rate. The final tax you owe on that money is exactly the same as any other dollar you earn. It's just that the upfront payment, the withholding, taken from that one check is bigger. It's really helpful to think of withholding as just an estimate. It's like a down payment on your yearly tax bill. And that flat 22% on your bonus, it's a really big conservative down payment. You're overpaying on purpose, just on that one check. So the logical question is, okay, if they took too much money out, where did it go? Did it just disappear? Nope. The good news is that money is just sitting there waiting for you. It all gets sorted out at the end of the tax year. And this is where it all comes together in something we all know and, well, most of us love, the tax refund. When you pay more in taxes throughout the year than you actually owe, the government gives it back to you. That's a refund. So when you finally sit down to file your taxes, the IRS doesn't see salary money over here and bonus money over there. It just sees one big pile of income. Your bonus just gets added to the total and is taxed at whatever your normal tax rate is. Let's just walk through it real quick. So you get your $5,000 bonus. Your employer takes out that hefty 22%. That's $1,100. Then, when you file your taxes, the IRS figures out what you really owe. That $1,100 you already paid is credited to your account. And since you likely overpaid, that extra bit just gets added to your tax refund. Okay, so let's just recap the big takeaways here. First, bonuses are special. They're supplemental wages. Because of that, they're usually withheld at a flat 22% rate, which can feel really high. But, and this is the key, it's all about withholding, not your final tax bill. Any extra money they take out, you get it back in your refund. So what does this all mean for you? Well, the next time you get a bonus and see that big chunk of change missing, you can take a deep breath, you'll know exactly why it happened, and you can rest easy knowing that money isn't gone forever. It's just an issue of cash flow, not a higher tax. We really hope this helps clear things up and maybe took a little bit of the sting out of that bonus paycheck. If you found this useful, definitely subscribe for more explainers just like this one.